G'day guys, and welcome back to the weekly VEMA Trader Market Scan. My name is Rhys, and today I'll be running you through the trades that we set up last week. We'll go and take a look at how they played out. Some of them are still active, so we'll see what we're doing there in terms of managing those positions. Then we'll go and take a look at Bitcoin as it is today, see if there's any trades we like to look of for the coming week ahead, potentially set those trades up if there are trades we like to look of. And so what we'll do now is we'll head to VEMA Trader and we'll get started. Righto, so here we are on the dashboard where we can quickly see the status of all the trades we had set up last week. So you can see that 2 have closed in the red. We have 3 that are still monitoring. You can tell that by the fact that they are blue. And then we have 1 that's quite heavily in profit. It hasn't hit the take profit yet. I've moved the stop up to reduce the risk, but at the moment that trade is still quite nicely in the green. But until you know, paper profits are just that, paper profits. It's until they're actually realized they are essentially worth nothing. So, you know, it's always nice to be in the green on a trade until it hits an exit. It doesn't really count for a whole lot. So in terms of the losses, this one here was an unfortunate one. So price rejected quite nicely off our level. So this was a short from Gulf. We got a really nice rejection, which did give me a bit of confidence. I moved the stop down to reduce risk, which I'm always really happy to do. Unfortunately, the move that punched up and hit the stop was a really high volume move. And so on the 1 minute, it's just this big, huge green candle. Even though my stop was down at about, say, like a 0.33% account risk loss, by the time that filled due to slippage on the exchange, it was a full 1.09%. So really the only note that I have here is that I've tagged slippage. Now, tagging slippage, I'm not sure if this is something I'll be able to use long term because slippage is kind of a fact of the market. It's an unfortunate fact, but it's sort of just to do with the way that exchanges work. But I thought I'll tag it because if I consistently note that slippage is causing me issues, maybe there's different things that I can start implementing to try and work around that. Off the top of my head, I can't really think of any, but I haven't given it much thought. If I consistently see slippage being an issue, I know that I need to try and work on that. And maybe there's no way to work on it. Maybe it's just part of trading the market, but it's always handy to have that tag there to collect that data. So that's it for that loss. We'll take a look at the other loss. So this loss here was on our test strategy where I just noted that we had a really big push up out of that zone. And so I wanted to try out a paper trading strategy to see if we came back to that zone, would it hold? We did get a beautiful rejection, right? We got a really solid buyback, a really nice bear hammer close on this, but then price just proceeded to tank its way through and eat the rest of that zone. So that ended up being a loss for 0.5%. That was a paper loss, so cool. You know, that's the whole point of having test strategies and having paper trading is to figure out what works and what doesn't. So good data collection there. We'll take a look at these still monitoring trades. This trade is the most painful trade that I have had in a little while. You can see that we just slightly got front run on the short from Foxtrot. Continued beautifully to our take profit, so that was looking at about a 4.18. You know, even if we had put our entry down 3.5, if we targeted the other zone, potentially could have got out still for that 4-1. Unfortunately, we just weren't in that trade. So the important tag for me here is front run, right? VEMA has the distance to activate condition, which can really help you avoid being front run. I do have a certain strategy that I have used as sort of a backup. I don't use it all the time, and I haven't really used it in these market scans. Until I see quite a few trades being front run, I'm probably not going to bother using it in these market scans, but important to tag front run because if it's consistently coming up, I know I need to work on that. So, real shame. I was pretty devastated, to be honest. Well, not devastated, but you know, it is just one of those things. When that trade from Gulf got stopped out, I was like, that's cool. I've got my shot from Foxtrot up above, and then the shot from Foxtrot just got missed and proceeded to play out beautifully. That always does sting a little bit. So anyway, that's that. I'm going to remove that short now. I still think there's a good chance it'll hold if price does get back up there, but I would rather just set it up again if, you know, based on what's happening when or if price does get back up there, rather than just leaving it running for now. And now we come to the final 2 monitoring trades. I'm going to knock them both over in this video because they are really similar, or in this little snippet. There was a short from Bravo and a short from Charlie. So I still do really quite like those levels. You know, nothing's really changed about those levels for me, but every now and then I like to sort of just reset my RAM, right? Just delete all the things that I had set up and just start from scratch. These are old trades. I'm not really paying attention to them as such anymore. And so I'd rather just clear everything out, start again, and just, you know, sort of refresh going forward. So for that reason, I'm going to cancel these 2, and then we'll take a look at the live trade. And so finally we come to the open position. Now this has been a really, really nice trade in my opinion. You can see price respected that zone to a T, right? I love to see that really good bounce from my zones. So that was really nice. The stop loss was previously under the first zone, not all the way down here, it was about there. And so I have moved that up just to massively reduce the risk. So now I've got probably about 25% the risk that I initially had. I think what I'm actually going to do here is jam this stop loss right up and just lock in some profits. So there's a concept called evolving risk to reward. Now it's not a concept I've covered with VEMA, I don't think anywhere. I don't even know if I've covered it on my own YouTube channel, but it's one that we have spoken about including into VEMA at some point. Basically what it comes down to is currently, with price being here and my stop loss way down the bottom here, I am actually risking, say 6.2% in terms of the gains there to make that 1.5. So in some sense, you could look at that as my risk to reward now, based on where my stop loss and take profit are, is a whopping 0.23 to 1, if I don't lock in any of those profits, right? So that's what evolving risk to reward is. It's my risk to reward at entry was this 3.5 to 1 sort of trade, but now based on where price is, I'm actually risking a ton of gains. Now they are paper gains, so they're not gains that I have made in profit, because until you actually exit, you haven't made anything. But I am risking all those gains that the market's given me to just eke out this little bit there. So what I'm going to do, there's two levels that I really like here. There's this 4-hour EQ that we're currently holding, and then there's this lower one down here. So you could do this a couple of ways. Normally I'm pretty, I was going to say conservative, it's probably actually the opposite. I'm pretty aggressive. And so I would just have it somewhere up here, so it's within my entry, basically looking for price to come down, bounce off this zone. I want to have it low, so I avoid any wicks, and then keep heading up to my take profit, because I do think there's a good chance price is going to go up to my take profit. This demand zone, or supply zone, sorry, there has essentially been completely eaten by this candle. So I do think there's a solid chance we're going to keep moving up to my take profit, but I want to lock in some of those gains. I really don't want to risk all those gains trying to just eke out that little bit of extra profit. So what I'm actually going to do here is I'm going to leave my stop loss just here for now, but I'm going to wait for this 4-hour candle close, which is coming in about 30 minutes. And depending on how it closes, I may well jack up my stop loss to be right under this candle. In fact, you know what? I'm not even going to wait. I'm just going to put it right up there, because that locks me in at about a 2.5 to 1, I think. Something, what happened there? Could not be updated. Let's try again. There we go. Locks me in at about a 2.5 to 1. I am really happy with the 2.5 to 1. And so I would rather just lock in those gains. Hopefully price does just continue on to my take profit, but if it starts to come back down, I'd rather get out, potentially start looking for another trade, because there is actually a trade that I'll set up that could essentially catch the rest of that take profit long. So in this case, I just want to lock in the gains that the market's given to me and make sure I actually realize something for this trade. So I will update you guys on this trade next week, because I may add or remove tags, or not remove, but I may add tags based on how this plays out. Maybe I'll realize I moved my stop too aggressively or whatever it might be. But for now, this is what I am doing with this trade. So now we will head to Bitcoin's current chart and we'll start setting some things up. Righto, so last Thursday we managed to drop one of the most requested user feature requests, and that was persistent charts in the start charting screen. So you will see that if you come to your start charting screen now, you now have a default chart layout, and you can save multiple chart layouts, and you'll notice that when you come back to that same chart on that same layout, all of your analysis will remain. All the indicators, if you change your candle colors, that's all going to stay now, which is really, really cool. I'm a big fan of chart layouts. I've always loved them, so I'm really stoked to have them within VEMA. There's just one little pro tip that I would give, and that is that because of the TradingView SDK, essentially what we get access to and what we can give access to through VEMA, there's no option to make a blank chart layout from scratch. So what I like to do is, before I start charting anything, you only have to do this once, but when you first come to your account, before you start charting anything, I think it's worth going to make a copy, getting a blank chart template, and saving that. So now I can go back to my other ones. That was default chart. I can rename this. So this can now be called market scans. And then if I ever need a blank chart layout, I can just come to blank chart template, make a copy of that, and then just rename it to be whatever I want. So now I've always got that blank chart template. If you didn't do this before you started mucking around, don't worry, it's not the end of the world. To get a blank chart is pretty easy. Just go to whatever coin you need, delete all your drawings, and then you can eventually make a chart. And if you've forgotten to delete some on another pair, you'll find them eventually, and it's not going to be the end of the world, but it's just a nice way that I like to do it. Comes in really handy to have that blank template, that blank layout there. Righto, so on the weeklies, as almost every week, not a whole lot to report. We did get a bit of a bear hammer, a bit of a doji, right? Price just sort of went up, went down, closed about where it opened, but there was a fair push to the upside that got rejected, and we closed, towards the bottom of the candle. So, bit of indecision, a little bit more to the bearish side than the bullish side. Not a whole lot to go off on the weeklies. On the dailies, we may be starting to see the beginning of the end of that bear flag. So we've been watching this bear flag for a couple of months, really. We're really now consolidating at the bottom of it. Now, we did consolidate at the bottom down here and proceeded to head back towards the top, so it doesn't mean that we're not going to head back to the top of the flag. But overall, I'm still just, a bear flag on the daily after a huge sell-off with pretty weak retracement, hasn't made it back to the 50. Everything here still feels quite bearish to me, and there's been a pretty decent rejection over the last over the last week. As we started to retrace a little bit, we've slammed back down pretty hard. That said, buyers did step in yesterday, so that's a good sign. But overall, I'm still leaning more towards this breaking down than heading back to the upside. But hey, we can play it both ways. So that's what I'm seeing on the daily. We'll take a look at the 4 hour. So on the 4 hour, we were looking at price around here somewhere last week. So really, most of what's happened is just, pushed up a little bit and then a huge, huge sell-off down to that demand zone that we'll talk about earlier in the piece. That was really well respected. In terms of trades that I'm looking for this week, there is 1 long and 3 shorts. 2 of the shorts are kind of go hand in hand, so I'll discuss them together. I'll start with the long. So first off, as always, if I'm longing with my high time frame bias being bearish, I'm dropping my risk down to 0.5%, which I actually think I forgot to do. No, I did. All right, all good. So the trade I'm looking for here is tied into that phase 1 strategy that we've been testing out. Essentially what I'm looking at is there is a supply zone here that we have eaten most of, and so I can conceivably see price getting up above and then continuing to head up to find more supply liquidity. So something like this, potentially, and I want to get in if we do close up above that zone. So in terms of tags, and that is a paper trade because it's a test strategy. In terms of tags, it's essentially just the phase 1, because that's what this one's called, against my high time frame bias, my daily bias is bearish, and the 4 hour supply zone. So I've got about a 6 confidence in that, and I am quite happy. So that is that trade. Let's get rid of that drawing, keep things nice and clean. Now, the short from Bravo. So when I was talking about the trades from last week and how I was front running one, and I said I had strategy to avoid getting front run, but I just don't really use it in the market scans, I thought, why tease you guys with that and then not actually deliver how to do it? So we have 2 shorts set up on Bravo. We have my pretty traditional, just straight up 0% bounce. Price hits my trend line, I want to be shorting from there. Great, price gets up there, awesome. The second trade that I've set up is essentially to avoid getting front run. It's like the backup. So I actually tagged it as front run backup strategy. The point of this trade is if price gets up close to Bravo, then rejects back and closes outside the zone, I want to get in. So if price goes straight up and hits Bravo, I'll be in on that original trade. And then if price comes back out and closes below, this position will fail to enter because I've already got that open position. So that's awesome. So I won't be getting into 2 trades where I only want to be in 1. But if price doesn't quite make it to Bravo, then rejects. So essentially, if I get front run, I thought I was going to draw across Bravo there. So if I get front run, something like that, this setup is there to get me into the trade that I want to be getting into. So how I set that up was I went with a 0.45 distance to activate, and I got that just by measuring, a rough distance into the zone that I was happy for, to call my front run distance, so something like that. Then I got my distance to confirm of 0.75, doing that the same way, sort of just measured down. Excuse me. To confirm that would be a close outside the zone, and then I added the candle close condition. In terms of risk, both these are for 1% because they're both with my high time frame bias. I've got a minimum risk reward on this one, which it doesn't really matter on my other ones because I know the risk reward as soon as I set them up because they're not waiting on these conditions. But it's important on ones where you're waiting for candle close or using slope trend lines because your risk reward may change depending on where price hits your trend line or what happens. You know, I need a 0.75 distance to confirm, but I might get a massive 4% distance to confirm before I get that candle close. And so I don't want to be in that trade if my risk reward is going to be botched. So I've got my 2-to-1 there. I've used other side of trend line for the stop loss because even if this does come and close a fair way down, I want my stop to be protected by that 4-hour EQ, by that zone, and by those two, by that 4-hour EQ and by that zone. So by doing that, I know my stop is going to be up here. I could have just used a fixed value. It would have done the same thing. But I try and use the other side of trend line just to show you guys different ways to use some of them as different tools. And then in terms of tags, pretty standard, 4-hour EQ, 4-hour supply zone, daily bearish bias. It's with my high time frame bias. So I've tagged that. I've got a 6. I am happy. So really the only unique tag there is that front run backup strategy because this is a separate strategy to my traditional, kind of like limit orders. Just sit the trend line there and short once price hits it. So that is the short from Bravo, or one of the 2 shorts from Bravo. Then we have the short from Charlie. So the short from Charlie is again one of my pretty traditional trades, 0% distance to activate, 0% distance to confirm. I have used this 4-hour EQ. I quite like that level. It's been pretty strong, pretty well respected previously. There is a supply zone just above it. So, there's a good chance that we will, if we get up there, that we will wick through that zone, wick through that EQ, hit that zone, and then reject. It's somewhere that I could see selling pressure stepping in. Now, one other thing that I like about that zone is there is the daily 50 fib lining up really nicely with that area. So if price does get all the way back up here, I could see it as being potentially a really good spot to be getting into a short. You can see I've got a whopping 6.3 to 1 risk to reward. So that's something that I am always really, really happy with. And so that is the setup from Charlie. So there you have it. Those are the trades that I'm setting up for this week. Hopefully you guys are all having a great week. Hopefully your trading has been going really well. Let me know if there's anything you'd like to see in these videos. Let me know if you're happy with the persistent charts feature, if you're loving it, if you found really cool ways to use it. And have a great day. Happy trading, and I'll talk to you guys very soon.